So today I'm here with Nick. Nick, how are you doing today?
Good.
Nick Nazon is one of our loan officers here at Morgan Financial. How long have you been with us?
About 3 years.
3 years. Okay, cool. So tell me a little bit about yourself.
I was born in New York, came here when I was one. Me and my wife just welcomed our first baby in the world about 15 months ago.
Awesome.
So it's been good. He's a good sleeper, but super hectic.
Cool. Yeah, that little schedule change when you throw another life in there, right?
Yeah.
Yeah, a little bit different. Cool. Well, so today we're talking about rates, locking rates in, rate locks.
Yeah.
Right. Okay. So what is a rate lock? What is a rate lock?
A rate lock is essentially when you protect your rate from any increases in the market. So once you lock your rate in and you're under contract and everything's starting to get going, you essentially lock in and protect yourself from any variations that occur.
Okay. So when does a rate lock typically occur?
When you go under contract.
Go under contract.
Yeah.
But the client has to, like, they have to specify, when we lock the rate, right? Or how do you work that with your clients? Do you tell them now's a good time to lock the rate? Do you try to lock them up front? When is the best time to lock your rate?
It's set up front. So once we have the initial consultation and they're looking to get pre-approved, I say, hey, this is what things are looking like. But once you put your offer in and you go under contract and it's accepted and you guys are super excited, we'll sit down, go over options and talk about what it's looking like for you.
Okay. I look at rate locks kind of like insurance because you usually lock a rate up front, right? You don't lock it at closing typically. The client can lock or float up front, right? And so I've found that clients, some clients want to float or play the market. And I'm like, well, I hope you know more than the experts do, because typically we don't know which direction rates are going to go. I mean, we can make some educated guesses based on data that may or may not come out. But at the end of the day, it's a gamble. Correct. If you don't lock your rate up front.
I agree, 100%.
Your upside potential, meaning the potential for rates to go down, is way less than your downside potential of rates going up.
Correct.
Right. Cool. So typically when you lock in at contract, so they get a contract, they come to you, you already had them pre-approved, they get a contract, they come to you, say, hey, Nick, I got a contract. What is typically the process for you at that point?
We look to assess options. Right now, over the last year or so, there's been a lot of buy downs. That's pretty common. So we go over their options and say, hey, this is what rates are looking like. How long are you going to stay in the home? What is your plans for you and your family? And are you interested in buying the rate down? This is what the market's looking like today. So once we go over those options and we all come to an agreement on this is the best one moving forward, then we look to lock in.
Okay. And what time, like how much time do you lock the loan for? Because the loan is locked for a certain period, correct?
Correct.
And then once loan closes, you're permanently locked into that rate as long as you closed within that lock period.
Correct.
Okay.
So it's usually 45 to 60 days.
Okay. So if they have a 20-day contract?
30.
30. Okay.
But only some people can do that.
Right. Well, we can do them fast.
I know.
Lower, that's another good selling point of time. The lower the lock period, the better the rate.
Correct.
So the longer the lock, if I'm locking for 365 days, there's going to be a fee to that, right?
Yes.
There's going to be a cost to that, right?
Pretty hefty one.
Rates are going to be higher. The fees are going to be higher and all these things. But if I lock for 15 days, because that probably will give me the best rates.
Correct.
Awesome. All right. So what should borrowers consider when they're looking at the rate period and how long they should lock something for? What kind of things should they consider?
The cost, how long they're going to be in the home, of course, and what are they trying to accomplish? Some people have a certain payment that they want to stay within, so that's very important. Some are very concerned with the interest over time, so that's important to them, as well as the cost. I mean, I shouldn't say I'm not a big proponent, but I always like to assess if you're investing X amount, what the break even is, and it doesn't make sense.
Right.
So those are probably the three top ones. So
you said break even and doesn't make sense. Yeah, that's some math that I've found that not a lot of loan officers will do for the client. It's like, look, if you pay, I hear this all the time. Look, Nick, I don't want to pay points on my loan. And I'm like, you don't want to pay points. It's a mathematical equation. I understand. A lot of people think that points go to you and put in your pocket.
Correct.
Right? They think it goes right to the lender, and that's not the case. Typically, if it's a discount point, the point is 1% of the loan amount, by the way. The points are used to buy down the rate.
Correct.
To give you a better rate. So here's a no point option, and here's, with a point or 2 points even.
Correct.
it's a function of math, like you insisted,
Absolutely.
because what is the cost and what benefit do I get at that cost?
Correct.
And that can be put into a monthly term of, hey, if you had this loan for 16 months, you'll hit your payback period. So then you'll be very happy that you got into a loan with points, right?
Yeah, for sure.
What advice do you have for borrowers out there that are locking in right now?
I would say to do exactly what we spoke about. You want to protect yourself from any changes. So some people are looking to float the market. I know this week's kind of been a little unique with what's occurred, but you want to lock in as soon as possible, assess your options, and then just be open-minded to the fact that buying down the rate might be a viable option. So I say those.
Okay, good. Yeah, it's silly not to look. I know a lot of lenders out there will just say, hey, here's your rate. I'm like, well, don't I have options? I know here we usually give out a couple options.
Correct.
And how do you structure those options? I mean, obviously tailored to the borrower, but is there any go-tos, or what do you look at when structuring those options?
I look to assess what the capacity of the borrower is. Is buying down the best option? How long are they staying in the home, of course? And when developing the three, you obviously, if the borrower is kind of really concerned about closing costs and such, then maybe buying down 2 points isn't the best option for them, but they still have options available. So look to assess that and give them something that they're capable of doing, of course.
Cool. Good. What mistakes do you commonly see or hear of borrowers making when locking in their rates?
Looking at the sheet, only assessing what the rate is and not the fees associated with it.
Good point.
Usually the cheapest lender is the most expensive. So if you're rate shopping, you want to take that into account.
Wait, hold on. The cheapest lender is the most expensive. Explain that to me.
So usually if you go to a lender and you've been shopping and two lenders tell you your rate, for example, is 6.5, and then somebody comes and says it's 5.125.
Right.
That person's probably going to be a little bit more expensive in closing costs, points, origination, stuff like that.
Right. But to me, it's a mathematical equation.
Correct.
How much did it cost you? What benefit did it give you?
Correct.
I think a big mistake a lot of people do is not looking at the points. Right now, points can significantly reduce your rate, more so than in the past. Typically, 1% of the loan amount, or 1 point, typically in a typical market gets you about 0.25% in the rate.
Correct.
And now we're seeing it a sale, right? It could get you 0.5% in some instances, even more.
Yeah.
It just depends on the day where the rates fall, credit scores, loan to values, things like that. But it would be foolish not to look at the options out there. Correct.
And that would lead me into my second one with floating. Take advantage of the day. A lot of people will say, "Oh, let's wait."
Well, I've seen waiting cost people a lot of money.
Yeah, for sure.
They're like, well, let me talk this over with my spouse tonight, and I'll get back to you tomorrow. Well, tomorrow the rates change, and do they get yesterday's rates today?
No.
Okay. So if you like the rate you see, take it.
Correct.
Quickly. Okay. Cool. What should our realtor partners out there know about locking in rates?
They should encourage their clients to lock in their rates as soon, because they're at the front end of it. So they are writing the offer, they get the executed offer. So as soon as they send it to us, they should be telling their clients to get in contact with your lender so you can make that decision. A lot of clients are shopping. So the conversation should look like you need to contact the people you were speaking with so you can lock in as soon as possible, get the appraisal ordered, and keep things moving on.
Right. Yeah. I see this, I've heard of agents saying, oh, we'll just, do that later, or get the insurance later, or, things like that. Anything that should be done soon.
Correct.
Sooner than later. I would definitely encourage, the real estate agent, sorry. I would definitely encourage the agent to encourage their clients to lock as soon as possible. Find a lender, do their shopping, find a lender, and commit and get going, or else it could slow down their transaction.
I agree.
Cool. Anything else to add?
No, I'd just say remain open-minded. Everybody's shopping. Don't be fearful. This is a normal rate market, of course, and just remain open-minded and look into your options for sure.
Good deal. Nick, now I got 3 questions for you, okay? I don't know if you were prepped on this beforehand or not.
I was.
Oh, shoot. So you weren't supposed to say that. Now we got to edit that out. Ooh, okay. But I'm kidding. All right. So, Nick, what is your favorite movie?
I would probably say Wolf on Wall Street.
Wolf on Wall. Okay, well, but he's still a good guy. Trust me. Okay. Favorite book?
How to Win Friends and Influence People.
That's my favorite book. You can't steal mine. All right. Who inspires you or has inspired you the most?
I'd probably say my grandfather.
Okay. Can you tell me why?
He just had a vision and just stuck to it. He's an immigrant, came here from Haiti alone. He has 5 kids.
Oh, wow.
And one by one, obviously got my grandmother over here and then started a family and kind of made things happen in New York and then brought my mother and the rest of her brothers and sisters over. So essentially to come where he's come from till today is just wow.
No, that's awesome.
Good deal. Well, that's it for us, folks. So thank you for tuning in.
Please like, share, comment, however you're taking in this information. Like it, share it, subscribe, all these things. We'd love to hear from you. And you can also head over to our website, morganfinancial.net/keeping your business on track. And you can watch all of our trainings and videos through there. You can binge watch and all these things over the weekend if you're bored. But that's all I got. Thanks for joining us, Nick. Appreciate it.
Absolutely.
Talk to you soon.
See you guys.